Yeah, I mean, I think it's a signal that we do want to make sure Congress hurries up and gets the next on just a pretty high number, and we don't even know to the extent which New York and Texas and California really printed it. So I think that we're going to have to brace ourselves for more stimulus. It's going to be necessary to make sure that all the states, particularly the ones that were later to shut down, we're going to hear probably bigger prints from them in the weeks to come because they shut down more recently. So we're going to need more support.
It feels like, Stephanie, investors we talk to, strategists we talk to, are sort of indecisive about how to look at these numbers. Are they just, this temporary induced a coma for the economy to make sure we can deal with and mitigate this horrible virus? Or is this going to be something more prolonged and more damaging to the American economy? I'm not sure we have a clear answer.
No, we don't have a clear answer. So these are the three things you want to keep an eye out for, right? You want to look at the virus numbers. And I expect those numbers are going to worsen because we're testing more and because we are getting more of a sense of urgency in terms of social distancing. Number two, you're going to want to look at the economic data, and the numbers are going to be horrible, absolutely horrible for quarters to come. But I would say, Sarah, that the S&P is down 24% year to date, and there are sectors that are down double that. So I think a lot of bad news is factored in. And third, I think one of the reasons why we aren't seeing these massive swings and volatility in the market like we had been seeing is because the bond market has stabilized. That's the actual bright spot in my mind, because we know how important the bond market is for the economic foundation. And with credit spreads thawing, high yield spreads are down 460 basis points from March. Commercial paper is down 78 basis points from its March high. Those are good things. Those are telling us that the Fed's actions last week are starting to provide liquidity, are starting to lead to a recovery in the bond market. And you need a recovery in the bond market. Eventually, you need to see a peak in virus data, and then you can see the market, the equity markets, actually rally from there. But all these things are interconnected at this point.